are watching India Today.
Good afternoon and welcome. We are starting with some breaking news just coming in. Pakistan team to donate match fee to terrorists. Pakistan team announces donation to Operation Sindoor victims, as it says. But India had demolished Jaish and Lashkar-e-Taiba hubs in Operation Sindoor. So who exactly are they donating to? Pakistan cricket team has announced that they will donate the match fees. But will it be going to the Lashkar-e-Taiba and Jaish-e-Mohammed terrorists? This is an announcement by the captain of the Pakistani cricket team aimed at the families of the terrorists. Shivani Sharma joins me on this story. Shivani, after the Indian team said that it will be donating all the match fees to the victims of the terror strikes, now the Pakistan team says they will donate to Operation Sindoor victims. Who exactly are they donating to? What are we picking up from our government sources?
Anisha, see, there's no surprise when the Pakistan cricket team's captain is saying that he will be donating the match fees to the victims of Operation Sindoor, and he says categorically that to the families who have suffered in Operation Sindoor. But very important out here is to understand that while we've already seen the generals of the Pakistani army standing at the funerals of the terrorists who were killed in Operation Sindoor on the strikes of 9th of May, is the Pakistan's cricket team also supporting the proscribed terrorists, these internationally proscribed terrorists of Jaish-e-Mohammed and Lashkar-e-Taiba? Now they are also being claimed as the family members of the Pakistani cricket team. So that's the nature and that's the truth which is getting exposed again and again in these remarks and statements when Pakistan's cricket team captain is saying that he will be donating the match fees to the people who have been killed in Operation Sindoor. And India has presented enough evidence, Anisha, about the fact that in Operation Sindoor initial strikes, only the terror camps were hit, and that too with precision. And the time also which was chosen, recently CDS has also clarified that the time which was chosen was so that minimum damage is done. No other people are harmed except the terrorists. So now when Pakistan is claiming that it will be helping these victims, that means it's once again adorning, or it is actually sponsoring these terrorists and claiming that they are also a part of the same terror funding system.
Well, clearly, Shivani, a very strange message going out from the Pakistan cricket team, even as India is making it clear that the only people who were affected by Operation Sindoor were the terrorists. So exactly how is the Pakistani team going to explain this one? Thank you for that, Shivani. We're moving on to more breaking news that's coming in. Are the Tamil Nadu cops planning a social media crackdown after Stalin's warning against misinformation? Stalin's cops may scan posts on social media. Tamil Nadu cops may be looking at questioning those who are posting on the Karur stampede, whether it is crackdown on lies or social media policing. That's really the big question. After the stampede that has happened in Karur that has killed several people, now the government may be cracking down on social media. The question really is, are there a lot of lies being spread on social media? Are we looking at policing about the lies that are being posted, or is this a crackdown which will affect free speech when it comes to criticizing the arrangements that had been made? But there is a warning, clear warning coming out from Stalin about misinformation. He's saying very clearly that there will be a judicial commission. Strict action will be taken against those who are responsible for what happened at the Karur rally, and such incidents should not occur again. But he is also warning that there should not be fake information, false information and rumors spread on social media. Pramod Madhav is joining me on this story. Pramod, what exactly is the Tamil Nadu government doing? What are we looking at when it comes to misinformation? What are we looking at in terms of action? with regard to the tragedy that has happened? Pramod.
It's a very serious matter currently because the Chief Minister has very clearly said that the bank operations have been lost, and it is a lesson for all political parties together. And in fact, he said that post Aruna Jagadisan report, a kind of draft copy where all political parties would come together and agree upon how to conduct such events, where to make sure that no such untoward incident occurs, henceforth will be created. But at the same time, he also said that he was completely shattered to see so many lives lost, and he went to Karur immediately to meet the family of the grieving and such. And that is where he also issued a kind of, we can call it as a warning or as a request to make sure that this issue is not used by miscreants on social media, especially to spread fake news, false rumors, or cause any kind of unrest. And he said action would be definitely taken. And this is what we can see as a kind of follow-up, where now we also got information that Tamil Nadu police is also combing through various social media messages where certain miscreants have used this particular
Pramod,
situation.
thank you for that. We'll be looking at what the Tamil Nadu government and police will be doing with regard to misinformation about the Karur rally. But it's time now for us to go over to Sakshi Batra of Business Today. Sakshi Batra joins us with all the updates of the market. Sakshi, over to you.
Hello and welcome to Market Closing on our brand new collab show between Business Today and India Today Television. It's 3 p.m. and we are here to get you all the market closing action. First up, let's take a look at what's hot in the world of corporate as well as the financial space. Markets trade cautious after a 6-day fall. We have seen that the Nifty is up by about 70 points at 24,700. The Sensex is nearing 80,600 odd levels. PSU banks, oil and gas, real estate, metal stocks are leading the gains, while there is cautiousness definitely visible on the street. Tata Capital launches India's biggest IPO of 2025. It is to raise over 15,500 crore rupees via the issue price band that has been set at 310 to 326 rupees per share. The issue will open for subscription on 6th of October. Top management says the band is quite attractively priced for retail investors. They have also clarified that the much higher unlisted price actually refers to older valuations. Navratri festive glitter boosts sentiment. MCX gold and silver have hit record high levels yet again. They have continued their bull run on a weaker dollar and expectations of the US Federal Reserve rate cut later this year. In Mumbai, the 24-carat gold today trades at around 1.16 lakh rupees per 10 grams, whereas 22-carat is priced at 1.07 lakh rupees per 10 grams, whereas silver is today priced at 1.5 lakh rupees per kilogram in Mumbai. Over 3,000 GST-related complaints have been received after tax cuts. Consumer Affairs Ministry has been forwarding these cases to CBIC, monitoring unfair discounts and using AI and chatbots to ensure businesses pass GST benefits to consumers. Social media platform X is to appeal against Karnataka High Court's recent order directing it to follow government takedown notices. The Elon Musk-owned company has described High Court order as deeply concerning and warned that the ruling would allow a vast number of police officers to issue arbitrary takedown directives. Good afternoon, I'm Sakshi Batra. Let's take it away, talk about the market, closing hour of trades, last half an hour of moves that we've been seeing in the markets. Right now, the Nifty is hovering about 0.1% lower in trade at 24,624 is what we are given to understand. Let's also look at the key sectors that have actually come under pressure. This is also a truncated week. Remember, Thursday is when we will have the holiday on account of the Shera. So we only have 4 days of a week that the markets will be trading in. Tomorrow again, there will be the first weekly expiry of the October series, and thereafter we will also have the Sensex contracts expiring as well. So the markets are pretty cautious among right ahead of the back-to-back expiries that we've been looking at. Also, when we look at the markets clearly, you can see the IT index, small caps, the consumer durables, autos, pharma, private banks as well, reeling under some pressure. But it's the PSU banks that are definitely leading from the front today. You can see a 1.6% kind of a rally that's unfolding there. You can also look at oil and gas, real estate, metals. These are all the other sectors that are shining bright. Among the key stocks on the Nifty, you have the jewelry stock, Titan, that's up by 2%. You have Wipro, State Bank of India, that's leading the PSU banking move today. IndusInd Bank from the private banks. You also have food delivery and quick commerce giant Eternal, that's also the parent company of Zomato, that's actually pulling up in trade as well. Hindalco is also up by about 1.3% in trade. Let's actually welcome our guest on board. We have with us now Mr. Avinash Gorakshakar, who's a market expert, to help us understand the current sentiment on the D Street and to, of course, help us understand what's next coming in onto the markets as well. Good afternoon to you, Avinash. Good to have you with us. Straight away, help us understand. You know, we are now sitting on the back of those 6 days of a consecutive sell-off in the markets. In fact, we have also given up 80% of the gains, the 1,000-point gains that the markets had, got from August 29. So in the last week alone, we've actually given up 80% of those gains. How are you looking at the current sentiment, which is extremely volatile at this point in time?
Yeah, I think, Sakshi, first of all, I think markets are volatile because clearly, a lot of liquidity has been sucked out by the primary markets. I think clearly, two big IPOs, Tata Capital is going to, raise something like 20,000 crores. So that's putting a lot of pressure on the secondary market, and that's creating a lot of volatility because typically, investors sell in the secondary market and apply in the primary market. Secondly, I think the markets are a little uncertain that the weekly expiry is now going to go away. There are very clear indications that formal announcements could be made soon, and that also is creating a little bit of volatility. And finally, the rupee, has turned weak. I think the rupee turning weak does not encourage the FIs to come in. And already the FIs have been quite heavy net sellers in the market. So, all these things have combined into the market sentiment getting a little negative. But I think looking at the fact of the matter is that we will be entering earnings season very soon. My sense is from the second week of October, you could see the corporate earnings season coming out. So there's a little bit of hope that numbers could be much better than quarter one. And most importantly, I think with inflation down, hopefully the economy should possibly do much better in the third quarter. So I think, keeping fingers crossed, I think one needs to take a stock specific view. Broadly, the markets are going to remain in a same zone. I don't think the markets are going to find any near-term immediate trigger, and they would obviously wait for the import tariff policy decision, which is now very well expected. Hopefully, we get it by the time Diwali comes. I think it would be a good reason to cheer. But otherwise, the import tariff kind of trigger and the corporate result earnings season are near-term triggers which are going to take the markets upward. So till that time, the markets, on an index level will remain range bound. It's better to, focus on stock-specific activity.
I wanted to also understand from you which are the sectors that one should now bet on. We've been seeing a large, long drawn underperformance and consolidation in the markets. But if one has to bet big at these lower prices, thinking that I'm a long-term investor and at every dip I should be accumulating for myself or taking the benefit of the low tide in the markets, which are the sectors that you believe still have a lot of steam ahead? Because in the periodic run-up, we've seen the consumption-oriented sectors also move up. We've also seen the banking, especially the private sector banks, play their part. Last year, it was all about the defense and the railways pack. Which are the sectors that you believe now will stand the chance of leading the recovery in the markets?
No, I think clearly, consumption-related sectors, specifically if you talk about, would be auto components, automobiles, capital goods, cement. I think even consumer durables, consumer appliances. These are sectors where there's a lot of tailwind in terms of demand. And with a good monsoon, with lower interest rates, with the GST cuts, I think you're going to see a lot of demand coming through in the third quarter of this financial year. Already, we have seen record numbers of, automobiles delivered from September 22nd onwards. So my sense is that these could be good opportunities, where you get good stocks at good valuations, and provided there are near-term earning triggers for these companies. So I think, you need to create a basket of stocks in this weak market, because, these kind of markets give an opportunity for investors to buy value at the right price. My sense is that investors who have missed out the earlier cycle could definitely add a little bit more, because typically the January to March quarter is going to be a much better quarter, and October to December would be the beginning of a much stronger revival in demand quarter for most of the consumption related companies like FMCG, consumer durables, consumer appliances, auto components, and automobiles. So, we have been telling our clients to actually start accumulating stock specific wise, which actually could give them a good alpha over the next, say, 12-15 months.
Fair point. Since we are talking about a lot of consumer-oriented spirit at this point in time, so as the festive season has already been progressing pretty well, we actually also saw, how consumer durables are also looking for a sharp growth this festive season vis-a-vis the previous festive seasons. In fact, we had also spoken to Blue Star that was betting big on demand of the festive season. We actually spoke to Managing Director Mr. B. Thiagarajan this morning, as he's actually called the golden age for room ACs kick-starting, with festive sales also expected to jump 15 to 20%, and FY26 growth likely to double from their initial target of about 10 to 15% as well. Let's listen in to what Mr. B. Thiagarajan had to say, and then we'll come to discuss what is the future of consumer durable stocks.
The first one, Makeup, as you're aware, on September 22nd, the new GST regime came into force. I would say in the past 5-6 days, it has gone as per the plan. First of all, there was a pent-up demand from August 15th onwards. Individual customers who stopped buying, and there were some bookings. And I would say September to September, I think it is around 20% growth we are witnessing. And it is not a season for air conditioners. But having said that, this 20% growth gives us the confidence that building up to Diwali, it should be a great season ahead. Go back to the years when summer season was not happening, sales was not happening. Still, the industry would end up with 5 to 10% growth. Now, with the GST benefit, I think it is possible for the industry to go ahead and close the financial year with even 15 to 20% growth. For air conditioner industry, it is already there is a installed base of currently, if you estimate, my estimate is somewhere around 70 million air conditioners will be there across the country. And many of them, the population that is exceeding 7-year period is becoming significant. That means from now on, there is going to be significant opportunity for replacement market as well. And we are governed by the e-waste EPR regulation. So therefore, you are going to be witnessing a golden period for room air conditioners business.
Right, Avinashi, coming back to you, you heard Mr. B. Thiagarajan talking about how the industry could be celebrating 15 to 20% growth on the back of these festive sales and the GST boost that they have got. Remember, he's also talked about that how this could really offset at least most of the impact that they saw because of weak summer. This time around, usually when there is the summer season, when the demand for such ACs is much higher than what it is right now during the discount season, is because this year summers were also bogged down by unseasonal rainfalls, erratic monsoons as well. So looking at all of that, whatever they lost in the summer months, they're hoping that that could get offset because of huge demand that is now being seen because of discounts and GST cuts at the same time. How are you looking at players like Blue Star, Voltas, Havells, all of these companies that are huge into this space?
No, I think, the point is very logical. This time the summer has been a little affected by unseasonal monsoons, and that is the reason summer sales did not pick up the way they normally pick up. But I think with the GST cuts and with the kind of pricing benefits which are expected now to come in, most customers have probably would cleverly like to buy the ACs at this point of time, because clearly they get better prices and typically festival season gives them added discounts. So I think we are constructively positive on companies like Voltas, Havels. My sense is that you could see a good ramp up in the October to December quarter, because most of the GST cuts have started from 22nd September. So I think the full impact of that would be felt in the third and the fourth quarter. But I think the tailwind is very positive. I think companies are making all conscious efforts to ensure that apart from the GST cuts, there are some discount offers also going on. And third quarter typically is a festival quarter, so I'm expecting a decent volume pickup, and more or less that would make up some part of the loss of business in the summer months, which did not happen as per expectation. So I think investors can look at these companies from a slightly medium term kind of time frame, but definitely next year is going to be a much better year for them, because apart from pricing, I think the business will be back to normal.
Fair point. So those are the other sectors that one could definitely be looking at as opportunities there. Next year, as Avinashji pointed out, is going to be much better and is going to carry all the benefits of the sales that we are going to be seeing underway right now. The other important bit is to understand how the primary market is shaping up. Viewers understand that in the stock markets, there are two segments. One is the secondary market, that's the listed stocks, and the second one is the primary market, where a lot of new IPOs, initial public offers, come in. Now remember, this time we are actually seeing the largest ever IPO that has been seen, in the history, as well as, we've been witnessing that for the last couple of years. We've had Hyundai, we've had LIC, we've had so many of the IPOs that are larger than what we have ever seen. And this time around in 2025 also, we are going to be seeing the largest IPO of this year that's slated to open on 6th of October. This is the second Tata Group IPO that in the last 2 years that we are going to be seeing. That will be of Tata Capital, that will now raise close to 16,000 crore rupees with a price band of 310 to 326 rupees. The public offer comprises of a fresh issue of equity shares as well as offer for sale as well, wherein Tata Sons International and Finance Corporation will be selling a part of the stock as well. Now remember, this is what the company's management today in their press conference has had to say about the pricing, and according to some reports which were talking about considerably lower price band than what is being traded in the unlisted shares. Let's listen into what the management had to say, and we'll come back to a discussion with Avinashji on that.
Many of these transactions that you're referring to happened quite some time back, and obviously at that point in time, it happens in unlisted markets where I don't think there is any interaction with the company. So often there can be a correlation or not a correlation with those transactions. We do have a very wide shareholder base, and we do have people and families who have been with us for generations. So since Tata Capital is again a large company, is going to be an important company of the overall group, we felt it is very important that when we are raising capital for the first time, we maximize the amount of shareholders and give them opportunity to come on board on Tata Capital. Every subsequent fundraising, as and when it takes place in a financial services business or in any other business nowadays, actually happens more with qualified institutional investors. So to that extent, this is an opportunity for us to really get as many investors as would like to come into the company on board. So the whole idea is to basically make sure the price is attractive enough for everyone to partner with us in this journey.
Right, Avinashji, coming to you, there are a few aspects that we need to discuss. One is, of course, what we will discuss as the opportunity that Tata Capital, the largest IPO of 2025, that it presents to retail investors. What do you think of that? Two, what management also clarified. Remember, the unlisted market price was somewhere around 1100 odd or so. And when we are seeing the price band being announced, those investors who invested in the unlisted market are looking at some kind of a negative impact on their investments in the unlisted market. Two, how should we be looking at that? Thirdly, large IPOs have rather been a disappointment. What has happened with Tata Technologies is again casting a shadow on investors as to whether they should go all out and look at this large conglomerate also coming out with an IPO. How are you going to address all these aspects, sir?
No, I think, Sakshi, your point is right that typically when a very large IPO of this size is announced, it creates a kind of a a doubt in the minds of investors. We have seen this happening like Coal India, LIC, Hyundai. So I think definitely large IPOs have to be taken into perspective only if the investor has a slightly longer time horizon. I think if anybody is looking at pure listing gains from Tata Capital, he may be disappointed, because I think clearly, obviously the company is going to benefit from this capital raising, but it would take some time to deliver the numbers. More importantly, on the unlisted kind of pricing which has happened is, I think, a lot of people have got stuck up into high-priced unlisted shares, including Tata Capital. So I think investors should realize that they have to be very careful about these transactions, because the price of 300 rupees and compared to the unlisted price of 1100 means that there's a very big capital loss. Such investors will find it very difficult to recover their cost. So I think investors should be careful when they do any unlisted trade, because this is outside the purview of the regulator.
Yeah.
And I think we need to be very careful. And of course, at the end of the day, I think it's going to be performance. You mentioned that Tata Technologies also underperform, but hopefully the NBFC market and the financial market is going to flourish, considering the kind of appetite for capital, specifically from the consumption related sectors. So I think we have been telling our investors that only if you have a 12 to 18 month kind of time frame you should apply here. It's not for listing gains. Tatas are definitely well respected, a very formidable group in the economy, and I think long term value creation will happen.
Okay. Avinashi, help us understand. This year, what we've actually seen is one of the most vibrant periods for the IPO space. In last 1 year, we have seen IPOs cumulatively raising 1.7 lakh crore rupees in the Indian markets itself, which has been far which has far outlived what has happened with the Nifty and the Sensex and the returns there. Both their returns have in fact been negative of about 4%, or if you compare from last October till September of 2025, the kind of returns that we have seen. Same way, we're trying to understand for our larger audiences what is considered beneficial. Should one look at investment in IPOs by way of opportunities to create great wealth over a long time, and of course looking at this as an early entry point vis-a-vis the secondary markets, which because of a lot of uncertainties have rather been an underperforming one?
No, I think entirely, the point which is important to note for investors is that they should understand at what valuation are they entering whenever they apply for IPO. I think investors who have been applying only for listing gains and just for a pop-up on listing are definitely in for a negative surprise. Nowadays, we see issues getting oversubscribed by 100 times, but the IPO listing price is hardly 10% or 14%. So, clearly, I think valuations, if they are expensive, then it makes a lot of sense to buy these companies post-listing, maybe after a couple of months when the initial excitement is down, and I think you get the stock at a very fairly attractive valuation. So I think at the end of the day, I think the investors should spend a little bit of time on understanding whether the valuation is attractive or whether it is very stretched, because unless there is some money on the table, Sakshi, IPOs are not going to make money immediately. It's going to take some time. And I think people have realized that listing gains are not going to be the main proposition when they apply for such IPO. So I think, net, I think you should look at the valuation, look at the future prospects of the company, and then take a call.
Space, in the NBFC space as well. HDB Financial, another big IPO that actually came in from a big conglomerate this time around. Their shares have fallen below the IPO prices. And what we've seen is that the losses continue even after the share lock-in has ended. How are you looking at that aspect then? What is really happening with such big brands, big pedigree, large conglomerates coming out with newer IPOs and yet seeing an underperformance in the stock markets?
See, Sakshi, frankly, we have been telling our clients that don't rush into something where a lot of investors want a particular stock, because too much excitement creates a little bit of problem. And I think HDB was a classic example. It has a pedigree like HDFC Bank, but unfortunately, as you mentioned, it's below the IPO price. So it always makes sense to, give it a miss to such kind of large IPOs, and obviously look at the post-listing opportunity, because, nothing is going to run away. You're going to get an opportunity to buy the stock. And in this kind of market, when so much paper is floated in the primary market, we believe that supply of paper is also going to be a big negative factor.
Absolutely.
So right.
Yeah, what we'll do is we'll just switch over and go across to Rajdeep Sardesai, who's standing by with legendary cricketer Kapil Dev to understand about how Asia Cup victory is panning out and how it's being celebrated.
And joining us now is a very special guest. He is arguably the greatest cricketer India has ever produced, the 1983 World Cup winning captain, the one and only Kapil Dev. Appreciate your joining us, Kapil Dev ji. Kapil Paji, I want to ask you, how do you respond to what we have seen at the Asia Cup?